Hello everyone, it's Wednesday, June 25. Today we're closely examining the euro and British pound charts to gauge potential market movements. Yesterday, the European currency remained range-bound. Buyers managed to hit a new one-month high, but failed to hold above this level, even despite Fed Chairman Jerome Powell's remarks. In early trade, market participants digested mixed data from Germany. The Business Climate Index exceeded analyst forecasts, while the current conditions indicator disappointed. Meanwhile, economic expectations improved, signaling growing optimism about a potential resolution to the US-EU trade dispute. Increasingly high expectations of geopolitical stabilization are supporting risk appetite, maintaining downward pressure on the US dollar. Speaking of yesterday's speech by Jerome Powell, he reiterated his patient stance on any changes to monetary policy in congressional testimony on Tuesday. Powell told lawmakers that the Fed is focused on preventing any potential tariff-related price increases from becoming an inflation problem. Referencing the 2021 price surge, he stressed the need for caution, identifying June and July inflation data as critical for future policy decisions. Powell acknowledged that faster-than-expected disinflation could lead the Fed to accelerate its timeline for rate cuts. The Fed chair also addressed implications of tax and immigration policies and highlighted that the dollar's prime role in the global financial system remains intact. The testimony is slightly dovish-tilted, waned on the greenback, supporting gains for both the euro and sterling. Equity in cryptocurrency markets also closed higher following Powell's remarks. Now let's take a look at today's macroeconomic calendar. It features France's job seeker totals alongside speeches by Bundesbank Sabine Moderer and BOE Deputy Governor Claire Romberdelli. In the US, Fed Chair Jerome Powell is scheduled to deliver another address, likely reiterating yesterday's testimony, so limited market impact is expected. Traders may take notice of U.S. new home sales, where only significant deviations from consensus could trigger volatility. Markets are anticipated to hold near one-month highs, though potential pullbacks suggest caution against aggressive euro-long positions. Turning to technical analysis, the 1-hour EUR USD chart shows that a decline followed by a false breakout at 1584 would generate a buy signal. Long positions could also be considered on the rebound at 1542 or 1498. Alternatively, bulls may try to reclaim 1628. A false breakout at this level will make it possible to sell the pair. If the price breaks through and consolidates above 1628, the euro could gain strong upside momentum, rising to 1666 and probably 1699. However, this scenario is unlikely at the end of the month, so caution is advised on long entries at these high levels. False breakouts at 1666 and 1628 would offer selling opportunities. Going short on a rebound could be prudent at 1.1699, aiming for a 25-30 pip move. As for the British pound, the situation is similar. Long positions could be considered on the false breakout at 1.3596 or 3562. Given a light UK macroeconomic calendar, the current bull's momentum may soon exhaust itself, potentially pushing sterling into a correction toward the 35.32 level. At this level, I recommend going long on a rebound, targeting a 25-30 pip move. If the British currency extends gains, a false breakout at 1.3645 would present a selling opportunity with a downside target at 35.96. Short positions at 36.83 should also be considered on the false breakout. For those looking to sell on the rebound, 37.10 may serve as an entry point, anticipating an intraday correction of at least 25-30 pips. Good luck to everyone.